안녕하세요. 꾸준한 영어 테드쌤입니다. 오늘도 낭독 전에 테드의 How does the stock market work? 4분 11초에 해당하는 이야기를 연습을 해서 시간 내에 충분히 원어민처럼 읽을 수 있도록 연습한 후에 낭독 들어가 보도록 하겠습니다. 주식시장이 어떻게 움직일까요? Alright, 준비. How does the stock market work? Selling these shares in coffee houses and the shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market. Since then, companies have been collecting funds from willing investors to support all kinds of businesses. And today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. So how do companies and inventors use the market today? Let's imagine a new coffee company that decided to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at investing and then sponsor the company's initial public offering or IPO. This launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the business. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they will sell their stocks with the hopes of making a profit before the company loses more value. As stocks are sold and demand for the stock goes down, the stock price falls, and with it, the company's market value. This can leave investors with big losses, unless the company starts to look profitable again. This seesaw of supply and demand is influenced by many factors. Companies are under the unavoidable influence of market forces, such as the fluctuating price of materials, changes in production technology, and the shifting costs of labor. Investors may be worried about changes in leadership, bad publicity, or larger factors like new laws and trade policies. And of course, plenty of investors are simply ready to sell valuable stocks and pursue personal interests. All these variables cause day-to-day noise in the market, which can make companies appear more or less successful. And in the stock market, appearing to lose value often leads to losing investors, and in turn, losing actual value. Human confidence in the market has the power to trigger everything from economic booms to financial crises. And this difficult to track variable is why most professionals promote a reliable long-term investing over trying to make a quick cash. However, experts are constantly building tools in efforts to increase their chances of success in this highly unpredictable system. 야, 3분 23초. 한 줄 남았네요. 끝까지 해보고 다시 도전할게요. But the stock market is not just for the rich and the powerful. With the dawn of the internet, every day investors can buy stocks in many of the exact same ways a large investor would. And as more people educate themselves about this complex system, they too can trade stocks, support the businesses they believe in, and pursue their financial goals. The first step is getting invested. 좋습니다. 자, 주식시장에 대해서 간단한 설명이죠. 자, 어릴 때부터 사실 경제교육을 해놓는 거 되게 좋습니다. 자, 다시 한번 시도해 보도록 하겠습니다. 4분 11초. How does the stock market work? Selling these shares in coffee houses and the shipping ports across the continent. The Dutch East India Company unknowingly invented the world's first stock market. Since then, companies have been collecting funds from willing investors to support all kinds of businesses. And today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. So how do companies and investors use the market today? Let's imagine a new coffee company that decided to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get a first crack at investing and then sponsor the company's initial public offering or IPO. This launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stock makes those investors partial owners in the business. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund the new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they will sell their stocks with the hopes of making a profit before the company loses more value. As the stocks are sold and the demand for the stock goes down, the stock price falls and with it, the company's market value. This can leave investors with big losses unless the company starts to look profitable again. This seesaw of supply and demand is influenced by many factors. Companies are under the unavoidable influence of market forces, such as the fluctuating price of materials, change in production technology, and the shifting costs of labor. Investors may be worried about the changes in leadership, bad publicity, or larger factors like new laws and trade policies. And of course, plenty of investors are simply ready to sell valuable stocks and pursue personal interests. All these variables cause day-to-day noise in the market, which can make companies appear more or less successful. And in the stock market, appearing to lose value often leads to losing investors, and in turn, losing actual values. Human confidence in the market has the power to trigger everything from economic booms to financial crises. And this difficulty to track variable is why most professionals promote reliable long-term investing over trying to make quick cash. However, experts are constantly building tools and efforts to increase their chances of success in this highly unpredictable system. But the stock market is not just for the rich and the powerful. With the dawn of the internet, everybody investors can buy stocks in many of the exact the same way as a large investor would. And as more people educate themselves about this complex system, they too can trade the stocks, support the businesses they believe in, and pursue their financial goals. The first step is getting invested. Alright, 다 돼갑니다. Losses, loses, losses, 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 losses. There are losses. 자, 준비, 시작. How does the stock market work? Selling these shares in coffee houses and the shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market. Since then, companies have been collecting funds from willing investors to support all kinds of businesses. And today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. So how do companies and investors use the market today? Let's imagine a new coffee company that decides to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at investing and then sponsor the company's initial public offering or IPO. This launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the businesses. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they will sell their stocks with the hopes of making a profit, but per the company loses more value. As stocks are sold and the demand for the stock goes down, the stock price falls, and with it, the company's market value. This can leave investors with big losses unless the company starts to look profitable again. This seesaw of supply and demand is influenced by many factors. Companies are under the unavoidable influence of market forces such as the fluctuating price of materials, changes in production technology, and the shifting costs of labor. Investors may be worried about changes in leadership, bad publicity, or larger factors like new laws and trade policies. And of course, plenty of investors are simply ready to sell valuable stocks and pursue personal interests. All these variable cause all these variable cause day-to-day noise in the market, which can make companies appear more or less successful. And in the stock market, appearing to lose value often leads to losing investors and in turn losing actual value. Human confidence in the market has the power to trigger everything from economic booms to financial crises. And this difficulty to track variable is why most professionals promote reliable long-term investing over trying to make a quick cash. However, experts are constantly building tools in effort to increase their chances of success in this highly unpredictable system. But the stock market is not just for the rich and powerful. With the dawn of the internet, everyday investors can buy stocks in many of the exact same way a large investor would. And as more people educate themselves about this complex system, they too can trade the stocks, support the business they believe in, and pursue their financial goals. The first step is getting invested. Yes, 4 minutes 11 seconds. Yeah, I did it. Oh yeah. 예, 잘했죠? 완성했습니다. 자, 이제 낭독에 들어가 보도록 하겠습니다.